Thank you. Thanks for coming. My name is Andy Fleury. I'm the founder and CEO at Weyden. Weyden is a provider for digital asset trading technology for financial institutions. As we all know, the market mood has changed a lot since we were all here last year. Last year, the main discussion was around counterparty risk in the aftermath of the FTX blow-up. A lot has changed since then. A lot of this change is actually driven by regulation. Here in Europe, we have the MiCA regulation coming to force end of this year. But besides the Bitcoin ETF launch in the US and the upcoming Bitcoin halving, the regulatory topics are probably the main reason for the renewed interest in our industry. So today I will be talking about MiCA specifically from a trading perspective. I'll talk about the implications of the new regulations for banks offering crypto asset offerings and talk about some practical considerations for implementing a MiCA compliant offering. So, MiCA is just one part of the moving regulatory landscape. Obviously, the size and influence of the European market with its plus minus 500 million people will most likely push other jurisdictions to establish and enhance their own frameworks. Recent developments have taken place also in other jurisdictions. There is Singapore, which has just expanded the scope of its rules covering digital asset custody and payment. Then I don't know if you're aware, Turkey, a market that's very crypto bullish. Every third person in Turkey has a Binance account, which I find quite astonishing. So they're about to release their new regulation as early as this week. And then we have some developments in the UK after the finalization of the government consultation earlier this year. So, for European banks, the time to act is now. Forces have never previously converged in this way as we see it now. During previous bull markets, banks and financial institutions always had the risk of a regulatory uncertainty. Even if digital asset represented a viable and an intriguing business opportunity, the technology and the infrastructure took a bit of time to develop. Both are now in a much more mature state than ever before. And 2024, for the first time, all three conditions, market, regulation and infrastructure, are finally all in place. This is a huge opportunity for banks across Europe, and the time to capture it is now. A small disclaimer, I'm an engineer originally, so I'm neither a regulatory aspect nor a lawyer. This section here also certainly isn't meant to cover the full spectrum of the MiCA regulation. Also, I'd like to thank Alireza from Enerton for his help in supporting on the legal side while we were researching for this presentation. Now, let's have a look at some of the specific provisions of the regulation that apply to banks that want to offer crypto asset services to their clients. MiCA's definition of a crypto asset service provider is clear, more or less. It covers exchanges, trading firms, brokerage firms, and advisory firms. Providers must register as a CAP, must comply with disclosure and communication requirements. They must undertake measures to prevent market abuse, which have been, very common in our space. This is in relation to insider trading, pump and dump schemes, things like this. Other than the existing national frameworks that we have today, a license granted by a regulator in one of the EU countries will be portable to other countries. The requirements also cover the safekeeping of funds and introduce a standardized government and control framework across the sector. Although MiCA wasn't drafted in response for FTX, the regulation evidently is designed to prevent for something like this to happen again in the future, hopefully. Weyden, as a technology provider, provides a lot of capabilities to help banks meet the MiCA regulation. For example, the inbuilt accounting system and the huge number of integrations with trading venues, but also integrations with core banking system and custody systems. Now, MiCA introduces obligations related to specific asset services, as we all know. They can be roughly grouped into 5 categories. There is custody, order processing, trading platform operations, brokerage services, and advisory. Except for advisory, all of this is a part of the Weyden offering, either directly or through partner integrations. Now, what does MiCA require from CASPs? Those requirements can be grouped into 3 categories. Custody requirements cover things like maintaining a register of positions and transactions for a minimum of 5 years. Then customer assets have to be fully segregated from the CASP's own holdings. And this has to happen on the blockchain ledger. And then there are quite significant capital requirements, which raises the barrier to entry for many startups. Then the order processing covers the entire trade life cycle. It requires the publication of trading pre-trade and post-trade data. And it introduces best execution requirements very similar to those we know from MiFID. And by the way, kickbacks are not allowed under MiFID or MiCA. MiCA also introduces specific provisions for operators of trading platforms and brokerage services. This includes robust infrastructure, business continuity, compliant with the EU Digital Operation Resilience Act. Now, it's worth mentioning that many of the MiCA provisions look somewhat similar to what we know from MiFID. Both regulations are designed to essentially protect end clients and investors. A notable difference is that MiCA makes specific references to the exchange of crypto assets. It requires the publication of a market price and a methodology to determine that market price. And, let's be honest, price determination has been, a bit challenging in the crypto market due to the lack of a standardized pricing methodology and the extensive fragmentation of liquidity. So pricing has been a bit of a mix of art and science, whereas ESMA is now taking a much more scientific approach. So that's definitely good news. For those familiar with MiFID, many of the MiCA provisions might look somewhat straightforward. But as we've seen with the pricing example, the crypto markets have very specific and unique complexities, and therefore compliance with MiCA isn't necessarily going to be a walk in the park. So, how can banks implement these requirements in practice? Let's look at a few challenges in our industry. As mentioned, MiCA introduces best execution requirements similar to those we know from MiFID. CASPs must take necessary steps to obtain the best possible outcome for their clients while executing orders. Taking into account factors like, and this is actually from MiCA, so taking into account factors like price, cost, speed, likelihood of execution, and settlement size, nature, conditions of custody, and or any other considerations relevant to the execution of orders. To me, that sounds a little bit vague, to be honest. And there is definitely no straight answer on how to do this in practice. So measures to achieving best execution must be defined in an internal best execution policy. Execution arrangements have to be monitored and their effectiveness has to be approved against the policy. But as we all know, the space is highly fragmented, across hundreds of exchanges, and there can be significant variance in price, trading rules, and trading fees across various exchanges. So prices of digital assets are notoriously volatile, as we know, especially over the short term. And the lack of centralized data sources means it's a challenge to even determine what is the applicable price at the time of a single trade. Information asymmetry has been a long-term issue in the unregulated crypto market. So MiCA now introduces specific requirements for transparency, which is a good thing. And the MiCA requirements actually go a step further in this regard than MiFID. ESMA determines that the technical capabilities within the crypto space enable faster publication of trade data. The latest consultation paper suggests price updates every 30 seconds or less, compared to 1 minute in the traditional security space. Trading platforms must publish pre-trade data. This includes bid, ask, and market depth, as well as post-trade data like execution, price, executed volume, and time of executions. CASPs need to provide access to this data to their clients to prove best execution according to their policies. ESMA has, of course, not yet issued detailed guidance for best execution. However, given the parallels of the two regulations, MiFID provides some indications on what we can expect from MiCA. MiFID doesn't prohibit financial institutions from working, for example, with a single broker. But the financial institution must be able to demonstrate that they can consistently obtain the best possible trading outcome for their clients. So in essence, this means that a single chosen broker must provide and be able to prove best execution and therefore connect to multiple trading venues itself. However, doing this without adequate trading infrastructure can introduce operational complexities. This is one particular area where Weyden offers assistance by offering connectivity to most of the well-known trading venues with the necessary infrastructure to provide best execution. MiCA and MiFID makes a distinction between brokers acting as an agent, routing orders via third party, commonly referred to as agency brokers, versus acting as a principal broker who trades on their own account. Agency brokers are considered brokers under MiCA and MiFID, and as such are subject to best execution rules. In contrast, a principal trade going through a principal broker, doesn't involve any external trading venues, and as such is not exposed to best execution requirements. The principal broker is in essence considered a prop trader. However, a single principal broker is not going to work for a bank or financial institution to remain compliant with MiCA. To offer best execution, multiple of these principal brokers would have to be connected. At this point, I'd like to highlight a bit more in detail how Weyden can support banks in offering MiCA-compliant offerings. Weyden provides a comprehensive platform for crypto banking services. It enables orchestration, the entire trade lifecycle. With the smart order router, best execution across multiple venues can be guaranteed. The Weyden digital asset accounting system offers an auditable book of records across internal and external portfolios and external accounts. The Weyden real-time pre- and post-trade data capabilities support compliance teams in meeting their obligations. The platform offers a treasury engine to automate management of treasury across several venues. Then there is an automated settlement engine to facilitate automated end-of-day settlement cycles. And the system is connected to multiple core banking systems and custody providers out there. To give you a bit of an idea how this works in practice, let me walk you through a simplified workflow. Starting with one client places a trade via the connected core banking system. Weyden then checks the buying power against the core banking system. Then the system checks if there are adequate balances on trading venues. If needed, exchange accounts are pre-funded. Then the system splits up the order into small child orders, issues them across several venues. Execution reports are received back. End of day, the settlement routine kicks in, and the system determines the net settlement amounts and issues automatic transfers via the connected custody systems. And last but not least, the core banking system is informed about the trade IDs that have been settled. We at Weyden have been supporting clients for almost 10 years. We're currently serving 12 banks around the globe in implementing their digital asset offerings. In total, the product has been deployed over 120 times, either on-premise or through our SaaS offering. In terms of trading volume, we typically trade anywhere from 2 to 3 billion per month. We also work with partners, core banking systems, Finova, Temenos, and Avaloq, and on the custody side, all the big names, Medico, Fireblocks, Copper, Tangeny, we partner with on various client cases. So that was already it from me. I hope I was able to shed some light on the practical implementation of a MiCA-compliant offering. We look forward to partnering with you on your digital asset journey. Thank you. Thanks for your time.